Morning True. Dabanamona, a very good morning to you and welcome to the latest Business Advantage PNG online business briefing. Today we're talking about energy, electricity, fuel, and I'd like to welcome everybody who's joining our live webcast this morning. We have people who've registered from all over the world. Extraordinary, really. Not just PNG, but also Australia, New Zealand, elsewhere in the Pacific, including hello to our friends in New Caledonia, but also in other countries as well, the United States, hello to you, Korea, Vietnam, and also the European Union, and last but not least, the United Kingdom. You're all most welcome. A couple of pieces of housekeeping before we start today's session. My name is Andrew Wilkins. I'm the Publishing Director of Business Advantage International, and I'm going to be your host for this morning. I'd like to acknowledge with sincere thanks our sponsor for today's session. That's Kina Bank. Kina Bank's sponsorship is enabling us to bring today's session to you free of charge. So our sincere thanks to them. Thank you to Greg Pawson and his team at Kina Bank. Couple of pieces of housekeeping. This is an interactive session, so you are very welcome to pose questions and send your comments. Please use the Q&A tab at the bottom of your Zoom screen to do so. And our guests will endeavour to respond either live during the session, or we'll be sending those comments and questions to them afterwards. And hopefully we'll be able to circulate any questions you may have after the event. The event is being recorded as well, and you'll be being sent an access link so that you can access the recording. So if you have to leave early today for whatever reason, you won't miss out on any of today's proceedings. Finally, I'd just like to draw your attention to a new publication about Papua New Guinea business called Doing Business in Papua New Guinea. It's the most comprehensive guide yet compiled on how to do business in the country. It includes such things as a business guide to every province, a guide to every industry sector, relevant legislation for each sector, tax guides, legal guides, guides to living and working in the country. It really is quite a labour of love we put together for you. It's available now as both a digital download for purchase and also online as an online access publication. If you'd like to see how you can obtain access to this marvellous resource, please email us at info@businessadvantageinternational.com. That's info@businessadvantageinternational.com. So, on to the main course for today. Our first guest today is Hulala Tokome from Puma Energy. Shortly, we're going to be hearing from Flagon Bekker, who is the Managing Director of PNG Power, the state electricity utility. And obviously, any business in PNG knows there are challenges with the power supply in PNG. Flagon has some very interesting and exciting announcements he's going to be making this morning, which I think will get your attention. So stay tuned for that shortly. But first, let's talk to Hulala. Welcome, Hulala.
Thank you, Andrew.
Hulala Tokome is the PNG Country Manager and Director of Puma Energy in Papua New Guinea. Puma Energy, of course, is a large multinational petroleum company with presence in 48 countries, and it's been in Papua New Guinea since 2014, I believe, Hulala. Is that right? We're casting our memories back.
That's correct, June 2014, yes.
I guess a couple of significant things to note. Not only are you a major petroleum importer, wholesaler and retailer in Papua New Guinea, but for a wide variety of fuels, but also you run the country's only oil refinery out at Napa Napa, just outside Port Moresby. And the last time we spoke, Hulala, I think you were telling me that Puma was the country's largest purchaser of foreign exchange. I'm not sure if that's still the case.
Yeah, I think when where the oil price was previously, prior to COVID, and where it has come down to, although it has come back up again. We were quite our demand on foreign currency was quite large, especially when we were importing crude. So yes. But I think it's on its way back up there, and it's a cause for concern for us as well.
Well, let's talk about the fuel price first of all, because obviously that is something that's close to the heart of anybody who's got a genset or has to run a fleet or has to run commercial vehicles in PNG. How is the price going, and where do you see it moving over the next period of time?
Yeah, I think yesterday's fuel price. There was a bit of a roller coaster on yesterday's crude price. We saw a downward aggressive move as many countries in Europe extended lockdowns and movement restrictions to curb infections as well. But what we've actually seen overnight is that the price has basically come back up again. So again, this has instilled fears of a slower demand recovery than previously thought. So at this point in time, I think there is an OPEC meeting that is due on April the 1st of all dates, where they would discuss production cuts to help support forward oil prices. So I think for us in PNG, I think we're very much at the mercy of where the oil price basically fluctuates or basically heads, in those particular directions. But our impact is always a month lag. There's always a month lag impact in terms of the price that is applicable in country.
What about volumes that are coming into the country at the moment? Have they remained stable, or are they increasing or decreasing?
I think for us, volumes for us, we've because of where the energy sector or the power generation sector has moved towards, in terms of into the LNG space, we've seen a decline in terms of volume that is for that particular sector. But in terms of the our crude orders that do come in, we continue to maintain our crude orders. But big impact for us has been also on the aviation sector, and now with the isolation impact, that's also going to have a huge impact for us, because towards the end of the quarter last year, we were roughly around 50% of what we were pre-COVID levels. But now with the isolation that is going to be, or which has already commenced, that's going to have another impact on our jet demand as well, because we supply 100% of the jet in the country. So that's going to have an impact on that.
That aviation fuel is mostly imported?
No, aviation fuel, we manufacture aviation fuel here in country. So with the refinery, we're able to, especially with the reduction in jet demand, we are able to produce more diesel rather than jet. So we're able to tweak the refining process to being able to get more diesel as a result of the lower jet demand.
Do you foresee any interruptions to supply as a result of the current COVID restrictions, or do you feel that you've got things under control now?
Yeah, I think the community transmission has really had an impact, and I'm talking not only on our business, but also I would like to think that on other businesses as well. I mean, we've had our fair share of number of positive COVID cases. We're swinging to actually have bubbles created in terms of making sure that we maintain and sustain our operations in country, especially for the refinery. That's going to have a huge impact to our staff in terms of ensuring that, or mobilizing them such that they're able to have, for us to being able to have those lockdown measures in place for them to move to camp, such that we can be able to maintain business continuity. Our business continuity plans had actually kicked in about 3 weeks ago, so that's also had a that's also ensured that we continue to maintain operations in country. And there's as you can see, I'm working from home rather than in the office, but that's where we've been able to continue to maintain business continuity going forward. But the key piece for us has been the refinery operations, just to ensure that we maintain supply continuity in country.
Obviously, a lot of companies have had to shelve plans or redivert resources over the last 12 months in response to the COVID-19 pandemic and the consequent crisis it's caused economic all over the world. You have had investment plans to upgrade and refurbish Napa Napa. Are they still on your long-term plans?
That's still on our long-term plans. I think for us, we did a refinery TNI, which is a turnaround and inspection back in 2018. And that's where the refinery goes through a 5 to 7 year, all refineries do that. They go through a 5-year turnaround inspection, maintenance upgrade, if you like, where the kit gets basically refurbished. For us, there's still long-term plans in terms of continuing to have that investment and upgrade the refinery. This year, we've got a very aggressive CapEx plan as well in place for not only the downstream business, but with the refining business, but also the downstream business as well. With the lockdowns, we are still positive that we can be able to, and optimistic that we can be able to get through those particular CapEx investments and upgrades to our facilities. And at the same time, for the refinery, that's pretty much the same thing at the same time. I mean, for us, it's being able to, I think, for us being able to have a product, especially within our gasoline or our petrol offer into the market as well. Having a premium product into the market, which differentiates us from the rest of the business as well within PNG. So that's also part of that refinery upgrade.
Let's talk a little bit about strategy or your long-term goals in PNG, and maybe let's look first of all at the downstream end of the market. Where do you see Puma moving as far as your future plans are concerned?
I think for us, it's been making sure that we continue to sustain what we currently have in place. Our business model will be changing this year, and there's no secret about that. In terms of how best we go about doing our business. We've also taken on our future energies business, where we're turning all our terminal facilities, having them all solar generated as well. We're working alongside with PNG Power as well for our smaller sites where we supply diesel to, in terms of having solar or part of our future energies business, being able to provide solutions for those smaller townships, and being able to move away from the oil dependency on diesel, or having diesel as a secondary source of power generation or backup to solar.
So you see yourselves having really a strong role, even though you're not going to be necessarily selling fuel. You still see yourself as going to be the supplier of the key technology for the energy for those kind of sites.
Absolutely, Andrew. And I think the thing for us is, if we don't change our business model, we're going to be left redundant in the market. So it's important that we embrace the technological changes that are evolving around the world, and we do also implement them within country as well. And that's an important element for us, because it keeps us relevant to the market. And at the same time, yes, there is a place for hydrocarbons in going forward, but the thing is that we also need to take on, have our future energies business being able to take it to that next level, where we become more like a one-stop shop energy solutions provider in country.
One of the, ordinary Papua New Guineans probably see Puma largely as a retailer. What's your plan for retail this year?
I think for retail this year, we plan to, we opened up a site on one of our new sites, which basically is, we've brought world-class facilities through to our Geruhu site. And I'm sure people who have actually gone and utilized the site at Geruhu will be able to attest to that, where it becomes more like a destination point rather than just a fuel station. And that's the concept that we would like to bring, in terms of being able to have a destination point for our retail sites. So it's, no one's happy when people come to the pump to pick up fuel. They're not smiling. So it's how we best can be able to change that mindset, where people are happy to actually go to a retail site And not only do they pick up fuel, but there's a complement of different retail offers that are available. So it becomes more like a destination point. So we plan to open up another one of those ones here in Port Moresby. And as we speak, we even though we're going through the isolation period, we've closed down our Hulala site, so we're going through a major refurbishment there, and we'll also do a major refurbishment at our Waigani site as well. So and not only in Port Moresby, we're also doing that in Lae as well. So I think the thing is our continued investment within the retail segment, retail business will continue to evolve.
I'm sure you get a lot of emails. We get a lot of emails about it, so I'm sure you do. People out in the provinces looking to set up retail sites for petroleum. What opportunities are there for SMEs to get involved with Puma?
I think there is I think in every week we get at least about 20 to 30 people coming in. I wake up from bed, we've seen a number of trucks drive by, and I think we can be able to set up a retail site. And I think the thing is, for us, most of these particular partnerships that we've got with retailers, because we only, out of our 100 retail sites, we only own about 25% or 25 or 26 of those retail sites. The rest are all dealer-owned, dealer-operated sites. And I think the thing is where we encourage and we engage in partnerships with the SME sector, to being able to enable them, create them, being part of that enabling factor for them to being able to set up these sites themselves and run it themselves. Because if you look at the ICCC pricing model, by them owning the site, by them being able to own the equipment, they're able to maximize on the margin that is available in the market, because it's all price controlled all the way through. So the encouragement is always to actually get our operators or even our SMEs to run and operate the sites themselves.
Hulala, we've already touched on the need, I guess, to go greener. And that's something which is a global trend across the industry. We even see companies like Oil Search, who are 100% petroleum at the moment, looking to diversify as well. I think the French Total is changing its name from Total Oil to Total Energy, to reflect the fact that it's going to be a provider of mixed energy solutions in the future. But what other trends are there globally that may affect the supply of energy into Papua New Guinea over the next couple of years? What are you seeing globally in your sector?
I think in our sector, and this is where our future energy has come into play, because it's really also being driven from our shareholder, being Trafigura being our shareholder as well, and in terms of that green energy, being able to move into that particular fold, rather than focusing only on the hydrocarbons business. So for us, the focus is really going to be in that area, not only within the solar piece, but also in the wind piece as well. Being able to take advantage of that and being able to implement that across our businesses within the Puma world as well. But at this point in time, we're actually accelerating quite hard in terms of having the solar piece installed at our terminal facilities, and at the same time at two customer sites now that have basically taken that on. We're working, like I said, we're working alongside with PNG Power as well to look at a hybrid type of a solution as well, in terms of being able to supply that into the market in your smaller sites. Yes, there is the LNG space that focuses on the larger town installations, and then we've also got that covered as well with the smaller townships being on diesel, that we transform them to solar.
Hulala, you did indicate you were happy to take a couple of questions from our viewers this morning. So I just invite anybody who does have a question if they'd like to pose it. But there's a couple here from someone I believe is familiar to you, Ashley Houston from Ella Motors. which we might go to, and then see if there are any questions as well from other people. The first question is about the change of the diesel fuel specification. Sounds a bit technical, but there is obviously Euro 5 and 6 regulation fuels, and then the current diesel fuel in PNG is compliant with only Euro 3. I imagine what Ashley wants to know is, can he bring in a different, more variety of vehicles if you're going to change the specification of the fuel? What are the prospects for that?
I think the prospects for that, for us, we operate within the fuel specs of the country, where the country specifications are 500 ppm. With the refinery, we usually manufacture well below that. It's usually around that 100 to 150 ppm that we manufacture in country. In terms of being able to bring in and do a blend mix, if you like, that we can be able to conform to the vehicle standards that in terms of Euro 5, Euro 6. Yes, we do have that capability of being able to do that. So it's not as if we're not able to do that. Our refinery does not produce that, but in terms of being able to see where the demand actually lies in that particular regard, it will be something that we can be able to do. And again, it's all driven from demand and the country specs that are currently in place.
Okay, so there's a challenge to your customers. If you want it, ask for it. And also, I guess the other one is unleaded fuel, premium unleaded fuel in PNG. Are we going to see that?
Yeah, I think I touched on that a bit earlier as well, in terms of creating a differentiator in the market. For us, being able to have that additive at our sites. You got Australia, you'll be able to see that at pumps. You'll have the premium plus the normal regular unleaded. For us, and that's part of that capex spend that we're doing this year, to being able to provide the differentiating piece in the market. So you'll be able to see that a number of our and that's part of our improvement at sites that we are looking at, in terms of refurbishing our sites such that we can be able to then start to create that differentiator in the market.
Right. So when do you think roughly we might start to see that?
I'd like to probably think that, if all going well, without any more further lockdowns, and for us to be able to have access to FX in country, I mean, we've got it all scheduled for implementation this year.
Marvelous. You do a lot of refining of imported fuels in PNG. What's the gap between what you can handle from locally produced oil and the oil you need to actually bring into the country? Could you use more of the local oil, or is it not suitable?
No, for us, we use, I think we're able to put it this way: the refinery capability and storage capacity can be able to supply the country, and especially where we're seeing power generation, being converted through to the LNG space, and at the same time to solar. It will obviously bring more capacity that we can be able to supply in country. So, in terms of what we do get from Kutubu and blend with other crude products, to being able to create a crude slate that we can then be able to get the products and get the yields that we require within the market, we're able to do that quite well. In terms of supplying what we do manufacture, that we can also be able to supply in country as well. So we rarely export diesel out of the country, but we do export the byproducts that come out from the refining process, such as naphtha, LSWR, which is a low sulfur waxy residue product. That also, so the refinery kit is a light sweet crude kit. So we don't get your heavier fuels or heavier oil stuff that comes out from the refinery.
Noted. There are a few more questions coming through, Hulala. What we might do is if you feel like it, I'm going to move on to the next segment, but if you want to answer those on Zoom during this session, you're very welcome to. You can probably see them coming up on your screen too. Alternatively, we'll send them to you after the event, and we'll try and get answers to all your questions for that. But thank you very much for the moment, Hulala. Much appreciated. We're going to move now on to electricity. Now, as any business owner in Papua New Guinea or manager would tell you, electricity supply is a challenge in the country, both availability and reliability. And there is one man tasked with improving the situation. His name is Flagon Bekker. He joined PNG Power, the state utility, in late last year as the managing director. And I spoke to Flagon a little earlier.
We understand, of course, that things are not perfect in the electricity situation in Papua New Guinea. We know that most companies habitually have their own power supplies independent of PNG Power so that they can have redundancy and continue to operate. We know there are occasional power outages as well. So that's a given. Obviously, we're keen to understand how we're going to move away from that situation in the future. So maybe we could talk first of all about maybe what your planned capital expenditure program for this year is, Flagon.
That's a great question. So first off, PNG Power needs to reform to survive over the medium and longer term. So a key element of what we'll do over the next year is really accelerate the reform process, both at a sector level, but also for the business. Second element we'll be focusing on is a refocus. So we will be looking at our people very closely to make sure that we have the right people in the right places geographically, and also in the right roles to deliver against a reform agenda. And I've kickstarted that reform and refocus processes both. The third element ties in what you're saying around CapEx, and that's refurb. So we believe strongly that there's been underinvestment, particularly in the national grid, all three grids and all the distribution systems. So there's been a lot of talk over the years about investment in power stations, in fuel conversion, and those are important. But in the end, without a reliable national grid, it's all futile. So the last element, the last R of the three R's would be refurbishment. And you'll notice that a lot of our capital expenditure programs and plans, and particularly around PEP and our partners, our donor partners, is orientated around the grid and around whether it's off-grid or on-grid.
So poles and wires.
Poles and wires, yes, indeed. So, from the beginning, so I started in the role on the 19th of October, but I've been engaged with the board and the management team from August last year. And from the beginning, it became very clear that there's been an underinvestment in this sector. So we very quickly realized that we need to reposition the narrative away from power investment and megawatt investment, and more towards balancing the CapEx around poles and wires.
So obviously, in order to do that, you need to have the funding to do that. How well capitalized is PNG Power as we move through 2021? What challenges do you have in that regard?
So that's a great question. It's very topical because the government of PNG and our share owners, KCH, will very shortly be making a very exciting announcement around the short-term and the longer-term recapitalization of PNG Power. The business is undercapitalized at the moment. I think we're well aware of that. That manifests itself in our inability to reinvest in our own assets, but also, more severely, it does hamper our cash flow position as well. So in the short term, we're looking at what we're calling the grid stabilization plan. That's a strategic short-term plan to inject capital into PNG Power. It will be. I won't get down to the specifics. We know what the number is, but I'll let the government make that announcement very shortly. But It is in terms of hundreds of millions of kina. So this will be a significant short-term capital injection to allow us to stabilize grid reliability and grid operations. Over the longer term, we're looking at a a very, very aggressive turnaround plan. And I think it's fair to call it a turnaround plan now. That turnaround plan for PNG Power will hinge on the reform that I mentioned before. It will hinge on our refurb strategy, but more specifically, it's going to hinge on a multi-year turnaround plan. We submitted very recently a detailed turnaround plan into our share owner and through them into the NEC. And the government is looking very, very closely at capitalization options to give us the ability to turn this business around. Again, the order of magnitude there is significant. Here we're talking more of hundreds of millions of kina again, but on the top end of the scale, quickly going into it could potentially go into six figures. The number is realistic. It will take us 3 to 4 years to deliver that turnaround plan. And again, it's tied very closely with reform. And you'll hear me talk about reform repeatedly as we go through this interview and across 2021 and all the forums that I'm in. It's very important that we as a company understand that in return for a recapitalization and a turnaround strategy, we are going to need to reform.
Flagon, there have been a number of plans for the power sector authored over several years, including with the assistance of the World Bank. How different, for example, is the plan that is in front of you now compared to, say, the National Electricity Rollout Plan, which the World Bank authored a few years back?
No, in fact, what we've done, you're right. If there's one thing PNG Power is not short of, it's reports and analyses. And we've taken a very close look at what the World Bank has recommended. We've taken a very, very good look at what our PEP partners are expecting of us. We also talk to, obviously, the government. We are a state-owned enterprise. And we do have a responsibility to the people of PNG. We listen to all those stakeholders, and I'm happy to say that the strategy that we'll be implementing is very much in line with the recommendations. So there won't be any surprises there. In fact, there's actually been an NEC. There's been a government directive to PNG Power for example, to unbundle or to become more competitive. So, in fact, I keep reminding people all we're actually going to be doing is actually executing on the strategies that have been around for a number of years. So none of what we're doing will be new. The difference is we now have an execution plan to deliver against those. And a key part of that, of course, is reform.
Let's talk about the priorities then. Obviously, if you have a plan, some projects have to happen before others in order for that plan to be executed. So where are the priorities lying as far as this year is concerned? Where do you see the key things you want to deliver this year?
2021 will be all about our grid stabilization plan. Yeah. We're going to spend that investment money that'll be coming very shortly from the government and from our share owners. We'll be spending it in 3 large chunks. The first chunk will be spare parts, will be critical spares to stabilize the grid. So it'll be about poles and wires, but it'll be about the parts and the hardware required to deliver a stabilization. It won't turn the business around, but it will stabilize the situation back to what I would believe would be around the 2018 level. So it's a grid stabilization plan. The second portion within that grid stabilization plan is we have some significant commitments on us as a business, which a lot of private businesses don't have, around CSOs, so our community service obligations. Mm-hmm. This links with our PEP partners because the government made some commitments as part of the 2018 announcement and the APEC summit, where they promised to commit portion of the funding so counterpart funding to the loans. We're going to help the government out in that respect. So we're actually going to be fronting some of that counterpart funding so that we can keep our PEP projects on track and online. That's the second portion. And then the third portion, broadly speaking, will be about just bolstering our working capital. As you can appreciate, our 3 largest costs are the power we purchase from our independent power producers, our partners. Secondly, fuel, of course, no surprise. And we're working to convert the fuel from liquid to gas. We're working very aggressively with that. And we've got an investment plan to bring our hydros up. And then thirdly, of course, it's salaries. We employ over 1,900 people across the country. We're a significant employer in the country. We're proud to be a large employer. So the third and last portion of the investment capital that we'll be getting for a short-term grid stabilization plan will be to bolster our working capital. So that will be the short-term plan, but we're not just resting there. This is in the context of a 3-year turnaround plan.
One of the features, sorry, just on that, one of the features, I guess, or the wins that we've been able to observe in the power sector over the last few years, two major developments. One is the rise of the independent power producer supplying into PNG Power, so PNG Power becoming a purchaser of power rather than a generator of power, and also the emergence of gas. So how key are those two elements to your future growth strategies?
They're fundamentally integrated. They're fundamental to our strategy going forward. We don't see independent power producers or IPPs, we don't see them as competition at all. We see them as the future by which we can accelerate growth. If we're going to meet our 2030 vision and electrification targets, we need all hands on deck. And we realize that we can't do this alone. And we see our IPPs as partners in that endeavor. It's worthwhile remembering that PNG Power has a very unique position in this country in that we were delegated, we were given regulatory responsibilities around 2010, and that's very unusual. You won't find that anywhere else in the world, I don't think, where you have a state-owned, vertically integrated utility that is also has regulatory powers, right? So now I don't totally agree with that. And we're looking at seeing how we can transition the regulatory portion of our responsibilities back to where it should sit, which is close to the people of PNG. But what that does do for us, the reason why it relates to IPPs is that we become fundamentally conflicted because IPPs, we have our own assets. We also dispatch, as the regulator, we dispatch IPPs, and that's not right because clearly I have a very strong incentive to dispatch my assets first, and I shouldn't have that responsibility. So we're going a step further. We're realizing that for us to release the power of private sector funding in terms of IPPs, we need to get out of the way as a regulator, and that's why we're looking very hard, very closely at the EA and ICCC, and we're working with USAID and other partners to make sure that those regulators are as strong as they can be. Because as soon as they're up to scratch, we'd like to transfer those responsibilities back. Gas, you mentioned gas. Gas, as you know, is a critical part of our profitability driver. We're spending too much money on liquid fuel. We need to move to natural gas. It's a transition energy source, as you know. The answer overall in our power sector is going to be about energy mix. There is going to be a place for all energy sources. Gas is integral to our future going forward, but not at the detriment of renewable energy. This country is blessed with an abundant source of particularly hydro and particularly solar, and we just need to make sure that we give those emerging, and they used to be emerging, they're not so much emerging anymore, but we need to make sure that we facilitate their growth as well. So there'll be a role for gas, very important role for gas, but also a very important role for solar, wind, and particularly hydro.
Well, to just go a little bit further with hydro, there's been talk of getting the Ramu 2 project up and running for a long, long time now, and there are also the Parari River and so on. Where do you see the hydro going? You have refurbishment plans also for your existing hydro that need to make them more efficiency. Hydro is it not, the cheapest form of power that you have at your disposal if it's run efficiently?
That's correct. I mean, our low-cost power development plan, which was put together for us by the World Bank and others, shows clearly that the centerpiece of the power production strategy in PNG over the long term has to be hydro. And you mentioned Ramu too, and we've made some recent announcements where we signed a conditional PPA with a consortium. We're very happy we're very proud of the decision we've made there. What that deal does in particular, it creates scale in the center of a resource-rich region in PNG. That particular opportunity, that investment will be the biggest non-resource or non-extractive industry. It'll be the largest infrastructure investment in the history of PNG. That is a nation builder. That has the ability. It's not just about power. It's not just about the mining sector. The investment that goes into that part of the country will be a game changer for the local economies, for the people in those local economies. And I would be very surprised if the investment comes from that. The local businesses that come from that investment don't outlast the very mines that we're all focusing on. So there's no doubt that we're getting ready. The government's made some recent announcements with Total, for example. I believe there's some very exciting announcements coming around Porgera very, very shortly as well. It's well documented in the press that PNG is open for business, and it's PNG Power's role to make sure that we're ready for when those resource sectors really start taking off. What Ramu 2 does is it creates the scale by which we can play as a country at a totally different level.
Just to give people an idea of the magnitude of the project, by how much this is feeding into the Ramu grid, which is based in Morobe and into the Highlands. What sort of scale of additional power will we have when the Ramu 2 project is commissioned?
Well, to give you an indication, at the moment, the installed base within the whole country is just under a gigawatt. When complete, that one single power station will be around 160 to 180 megawatts. So at the flick of a switch, we'll have almost 20% additional capacity. But on that particular grid, it will be the giant. It will stabilize the grid. It'll actually facilitate the investment from other IPPs because they will be able to be more flexible on where in the dispatch curve they would like to play. So, there's been some kind of concern that because of the size of that deal, it's 160 to 180 megawatt project, run-of-river project, and there's concern that it drowns out other investment. And no, that's not. Anyone who understands the power sector understands that there are different places in the dispatch curve. There are different stages of the day. There are different times of the year when energy mixes come into play. And what this does now is it really opens up the opportunities for very innovative private sector players to understand where they can play and at the right price. So, if you look at what Ramu 2 is going to do, it'll underpin the resource sector development in this country for the next 50, 60, 70 years. It's the game changer that was needed to bring the giants in the resource sector into play. We're very excited about what that will do for us.
It does sound very exciting, but when do you expect commissioning of this project to actually completion?
Yeah, so we should be looking at financial close within the next 3 to 4 months aggressively. Then construction will be starting fairly early on the ground. We'll make a head start on it together with our consortium partners. And we're looking in around 6 to 7 years that plant will be commissioned. But it will depend, again, it also depends on our resource investors, on our local. So, we are working together with the consortium. They do understand that this has to be done lockstep with our resource.
You need customers.
Partners. Yes, yeah. Yes, we need off-takers, right? We need off-takers, and we're flexible. We're flexible. We have in conversations with all the key players in the sector, and our message is the same. We're a utility. We're here to make you successful. And if you want to accelerate your program, we'll adjust accordingly. If you, for whatever reason, need to delay your production curve or your production plans, we will adjust. So tentatively 6 to 7 years, but we're happy to accelerate that if the sector requires it.
We might come back to some of the other power projects that are in the offing, but I'm interested in also looking at maybe outside of the grids and the extension of the grids maybe to further areas of population. This was the driver for the announcement at APEC 2018 for the PNG Electrification Partnership, which that was announced by PNG with the US, Japan, and Australia and New Zealand, I believe, to actually get power to more of the population. How is that project going, and how does it tie in with the strategic plan, if you like? Where can we expect progress to be made in reaching rural areas with power?
There's basically three branches of initiatives around off-grid. So we group that under a broader term called off-grid. One is the rural electrification, which is largely poles and wires. Right, so there's targeted investment, and a recent announcement by the Japanese government of an investment of around 34 million kina, which is a grant, and we're very appreciative of that. That's purely focused on localized poles and wires. The second element is bringing the generation megawatts closer to the people. That is largely centering around a solar or a hybrid solution. There's no doubt that because of the remoteness of some of these regions, we won't be able to get away from using particularly liquid and thermal power. But we started looking at around 17 projects together with the IFC, and then we filtered them down. We're now proud to say that 10 of them look very highly likely to go to the next stage. And that's a hybrid solution around bringing power to these very, very rural and very remote regions. And then the last portion is we're working with local government. So local government are really coming to the table now saying, listen, it's in our interests and we want to help you. And we understand that the business model is difficult to get right. The further away you get away from a national grid. How can we help you? And so we're working with a whole bunch of donor partners to investigate smaller solutions that aren't that are very attractive. I mean, in the end, it'll provide power connection points and lighting for local people. But it really is sized to the smaller communities that where the economics don't really hold up for anything more aggressive. So we're doing everything we can to bring light into the lives of all the people of PNG. It doesn't matter how remote they are. I won't lie to you; it's not an easy task to do, and it never happens fast enough. And we appreciate that, and we're not proud of the fact that we're not lighting up the lives of the majority of the people of PNG. But there are plans in place to do that, and particularly our donor, our pet partners around Japan, the USA, Australia, New Zealand. They've been very engaged on that. The ambassadors and the high commissioners. It's probably the second or third thing they want to talk about with me every time we meet, and so we're very aware of what that'll take. COVID hasn't helped, I must say. What really has delayed it over the last 18 months is COVID. Yeah. So if we give an indication now, the government announced, and rightfully so, an isolation strategy where they're limiting movement between towns, they're limiting movement between cities. So obviously this does slow us down. Of course it does. But we're not wasting our time. We're using this time to prepare so that when those restrictions are lifted, we can get out there and deliver these projects.
Okay, there are quite a few projects you mentioned there. Maybe we could probably too many to talk about, but maybe of these rural projects, maybe one or two that you could sort of point out that either you think are going to be particularly promising or particularly effective.
Yeah, we're looking at a project in Elatau, for example, which is an IFC-driven initiative, and they've been great. We're probably about 6 months away from breaking soil, and again, it would be faster if it wasn't for COVID. But that business case has been approved. There'll be capital going in, and that is a hybrid solution which will be around a gen set combined with solar, and that's typically the model that we'll follow. There are another 5 of those that will kick off early in 2022. It would have been early in 2021 if it wasn't for COVID. And then in addition to that, in 2022, the back end of 2022, you will start seeing a rollout of more of those projects.
Let's talk about reform, Flagon. This is something that I know is a subject which is close to your heart. And I guess the most prominent reform is the introduction of a national energy authority, an NEA, which is going to take over, I believe, some of the regulatory authorities that you mentioned that PNG Power currently has. How is that going to work in practice?
So in practice, so from our side, we've just recently created a subsidiary. We're creating a subsidiary company, which will where we will group all our power purchasing agreements, PPAs. So in future, all new PPAs will be signed against this particular subsidiary. Right. Our current PPAs, we would look to novate and put them against this subsidiary as well. We've created, as I mentioned, part of my refocus strategy was to refocus the right people in the right places. We're ring fencing. We're creating Chinese walls over 2021 around our national systems operations team. So this is a technical team and also a bit of commercial, but mainly technical team that look after the integrity and the security of energy in the country. So they physically run the grid. We're ring fencing them, and we're creating a special team there because you can see how PPAs combined with a national systems operator is perfectly positioned to be handed over to the NEA or whichever regulatory body. And this is very similar. I mean, this is the practice that's taken place around the world, as I'm sure you're aware. In Australia, you have the IMO on the West Coast, and if you look at the ISOs in the US. And even in New Zealand, where you have a market operator or you have a systems operator that normally sits to some degree near a regulator or linked to the regulator. So on our part, is we're not waiting for the NEA to be ready. We're not waiting for the ICCC to be ready or for that reform to happen. We're under the assumption that it's going to happen, and we're working to a timeline of around 18 months to 24 months, where we want to be in a position where we can hand over the technical system operations, plus the commercial oversight of PPAs to the regulator.
What are therefore the prospects, given all the things you're doing, of the actual cost of electricity coming down in PNG in the short to medium term?
Oh, that's Andrew. That's a brilliant question. And that's actually what this is all about. Ultimately, PNG has some of the highest electricity prices in the world. That's not sustainable. This economy needs manufacturing investment. It needs resource sector investment. And as you know, miners love access to cheap electricity. To give you an indication, typically between 35 to 45% of a mine's costs lies in electricity. This is a major input into their business. We understand that. We need to get those prices down. And the way we can do this, where we can drive down tariff, where we can drive not only tariff reform, but the prices down, is through the reform of the sector, through reform of PNG Power. And the reform element that is critical is we need to make our new investment in megawatts, in assets, in that energy mix, we need to make that process competitive. Right. Ultimately, around the world, there are, I believe in, not so much in 2020, because globally there was a slow year, but in 2019, there were over 120 auctions run globally. So the process by which a country or investors come to the market to express and to price and to compete for investment in megawatts it's well understood. It's well documented and it's very transparent. That process is the process that we need to implement here in PNG. It happens in the region already in smaller countries than PNG, so there's no reason why we can't. And that is the PNG Power Sector Investment Program, the PPSIP, which we're working together with USAID on to help us understand. That should be run again by the regulator. It shouldn't be run by PNG Power, because right. we'd like to play in that market. We'd like to offer solutions to the sector, but we can't if we're also the judge. So I'm happy to say that the ICCC, we will be looking at between 1 and 3 auctions this year that the ICCC, in this case, will front. And that process is a transparent process, and it's a process that USAID has helped us out on. That is our that is another example of how we're driving reform, where we want transparency and competition into the generation space, because only through transparency and competition can you ensure that you get the best possible cents per megawatt and energy cost. When you make the private sector compete, over time, you will drive down your production costs. Then, of course, you've got transmission and distribution, and we're looking at reform in those parts of our business to drop costs there. But ultimately, as you can appreciate, the biggest portion of your cost is your generation costs, right? So how do we drop tariffs? How do we drop electricity prices in the country? In future, investment must be competitively placed and competitively bid for. In the past, we're reviewing our power purchasing agreements at the moment. And as I said to you, together with our subsidiary and our larger reform picture around handing it back to the NEA and or our CCC, we will be looking very closely at how we can re-engage with our IPPs around the price levels, so that in the short term, we can take some costs out of our generation costs and hand those savings. We want to hand those savings over to the end consumer.
Is there a slight change in a mental approach, but the difference between a tender and an auction, clearly?
Yes. So we have the ability, as I said to you, PNG Power, we have too much market power, as I explained to you. So yes, can we run our own tenders? Yes, of course we can. But I don't think that's what the answer. The answer is for a strong, stable, trusted regulator to be the arbiter of transparency and competition, going out to the private sector and saying, I'm going to run an auction, and through that auction, I will bring the best possible technological solution at the right price or cost to the people of PNG. So I don't believe PNG Power should be running tenders anymore. I believe the ICCC should be hosting auctions that in the future we would love to, we want to, and we can play, be a part of. So you're right. The answer is not tenders from PNG Power anymore. The answer is publicly run auctions.
And when will the first one be taking place?
Yes, so we're looking at kicking that off early in the second quarter. We'll probably be ring-fencing. Well, we will be. We're ring-fencing it around renewable energy, particularly solar. We're not going to shock the market with. We're not going to be too aggressive. But if you appreciate, this is a long road to go. If we want to meet our Vision 2030 goals and invest in this sector nationally in the right place, the right price, we need to get used to running multiple auctions that are transparent, that are clear. So in the second quarter, we're hoping to make an announcement around our first auction. Most likely, it'll be a solar-orientated auction. We, as PNG Power, we own significant amount of land across. In fact, I often tell people we're actually we're actually a property company that happens to sell electricity. We're happy to throw some of that land in. So we're happy to say to investors, look, we'll provide the land. So there might be a with land or without land option. And we might limit it in terms of size. We might say, look, let's just do a 5 megawatt to 10 megawatt window. Let's run through that auction. At the end of it, if there's enough interest and if the price is right, we'll award it. If not, we'll learn from it. So we will get together with the ICCC. We will get better and better at running auctions, so that we get the right size with the right energy mix at the right part of the country.
Well, there you have it from the horse's mouth, and what an energetic gentleman who's the measure of energy and enthusiasm is anything. We've certainly got a very exciting time in PNG Power's near future. So our sincere thanks to Flagon Bekker for spending time to talk to us this morning, and also to Hulala Tokome from Puma Energy. Hulala's been very, very busy answering your comments and questions in the Q&A tab. If you haven't seen those, please have a look. And just a note that we are taking note of all your questions, and we'll endeavour to get answers to those that we haven't been able to cover during this session. In due course, you'll be sent an email with a link to whatever we can get for you. That's it for today. Our sincere thanks again to our sponsor for today's session, Kina Bank, who've made it all possible. This online briefing is the latest in an ongoing series. We hope to have them every month this year, possibly even more frequently as well. And you'll be able to find this recording of this event on YouTube in due course. Look out for more briefings in the coming weeks and months. To keep in touch with what's going on in PNG business, go to Business Advantage, png.com. You can also follow us on Facebook, Twitter, LinkedIn, all the socials as well. So that's it for today. I hope you had an enjoyable session. Enjoy the rest of your day. Please stay COVID safe, and may your business have the advantage. Good morning.